How's everyone doing today? Good morning face. Put on your war face. I think there were many face members yesterday that took advantage of Turnaround Tuesday. Hi, Ash. Will it ever go down? Why is it manipulated? Hello, Rob. Anthony Constantine, are you here? Think you called Turnaround Tuesday yesterday? We also had Blake Morrow call Turnaround Tuesday yesterday. He came on live with Short from Up Here in the Euro. What a great entry by Blake. You guys know I wouldn't have seen it, right? So Blake did point out that we had divergence on the daily, and he pointed out the DSI. And that was a great trade because according to my work, and I'll be interested in hearing what Blake has to say, this should not end up being the high because besides the daily, we confirmed on the 1 hour, on the 4, so just not on the daily, but we have the makings of a reversal week. Both EG and Euro on the verge of turning lower on the week here. But, you know, a lot's going to depend on NFP on Friday. We have a great guest with us today, Bill Downey. Bill's already in the room checking us out. So I'm not on camera. I haven't shaved for about a month now. I'm just kidding. So great call by Blake. You had a lot of 2 drives that worked yesterday. I want to just show the yen. The gold was a 2 drive that it came off of. I'll just show you that, you know, sometimes being disciplined, you miss things. Well, because you guys know I'm a big believer in 3 to complete, but there's no holy grail. Look at this in gold. One, 2. I was waiting for another one, never happened. Still way above the breakout at 1300. Still looks pretty constructive to me. I wouldn't be against selling it up against 1330, and it might just be a buy here. For at least, I wouldn't sell it in the hole here. I'd at least wait for some type of retrace of this. And the yen also posted a 2 driver. And the yen's very important, especially to gold bulls. Blake's pointed it out many times. You need a weak US dollar yen, meaning a strong yen for the gold market to thrive. That's one of the important parts of it. So here was the yen yesterday. Look at this. 2 drives here and took off. So I'm starting to think that maybe I should probe the first non-confirmation instead of waiting for 2. Because look how powerful this was. But this is the importance of using TFs. On the 4 hour, it was a 3 drive, right? So if you're only looking at short-term time frames, you wouldn't have seen this. And I'm human. That's all I was looking at. I didn't really discover this till later on in the day, but you had a pretty classic 3 drive to a bottom here. Right? Everyone see it? 1, 2, 3. RSI above 30, took off. But I want to take my telescope out for just a minute in the yen and show also why it held there. So the importance of going with your telescope at times is very important. So look, we have this very important support level. That's what the yen held yesterday. Last time down here, it was good for a nice little pop up towards, I don't know, 114-ish, 113. Then this, on this low, wasn't quite down to these levels. We had a similar type of rally. Highs 14.5. So here we're holding here. And I'm going to be very interested to see what kind of rally we could launch from the support level on the third time. So the most bearish thing the yen could do is, you know, maybe just correct this halfway, 61.8, whatever. But this line in the sand, this demarcation, is starting to look like a descending triangle to me, a small one within a larger one. So here you go, something like this. And the implications is a breakdown under 109 takes you down to 101, back to this support zone. Okay, this is how gold really tears, if it's going to tear. Back here. So you have a mini descending triangle here, breakdown under 109, close, measures down to here, just off this. And then you'll have a larger descending triangle. So, you know, sometimes you find fractals. You find fractals of it. And here's your larger one. From up here. Oh, I think there. And they're both reversal formations. And I couldn't get excited about the yen until we started breaking out and negating the formation here. Everyone with me on my analysis here? Okay, the yen being very important. That this could be a descending triangle, and then if you start looking at this as a big descending triangle, I don't even want to give you what the downside targets are. But if gold is really going to get going, you need a breakdown in the yen here. And for an extensive move in gold, you needed to take out 98. So, I mean, this is a huge call if you look at the weekly. And a measured move, and call it 25, is going to take you to 75. But I do think we've been talking about this since the inception of FACE, you know, big debate about whether the yen was going to, you know, re-enter its bull market and head up towards 125 or 150. And since the room has been open in April, really, all we have is sideways, starting to look bearish. Has to get through the minimum here to turn the picture positive for me, 113.20. Yen is a linchpin for a lot of other instruments and asset classes. So pay attention to it.
Hey, good morning, Dale. You know, we're about 7 minutes away from ADP non-farm this morning. So,
hey, great Euro top pick yesterday, man.
Thanks. You know, I traded it short like twice yesterday. I shorted it, and I think I covered it around like 120.10 or something, being short at like 120.40, 38 or something. And then I shorted again, you know, on the break below 120. So I mean, it was a really nice, nice,
good day for a summer session, you know.
Yeah, we got a lot of movement yesterday. I was really impressed. Hey, real quick before we're gonna cover the ADP live, but okay. I want to point out that if you guys, you know, use Forex analytics, the reversal candles that we saw almost across the board. I mean, if you look at, like, you know, here's the euro dollar candle, posted a shooting star reversal candle today. That was, I mean, this is yesterday. You know, this is yesterday. I mean, the euro is significantly lower now. It's almost 50 pips lower. Pound dollar, you know, a reversal candle there. All right. And you know, actually we're pretty close to the same right now, but like the dollar Swiss, that was a big reversal candle there. You know, we saw reversals, you know, really key reversals across the board. Now, the problem is that we have ADP right now. So ADP, you know, whether the dollar is going to continue or not, it really is solely dependent on how strong or weak the data is coming in right now. And the market's looking for 185,000 jobs. Now, I've talked to a lot of traders, big traders too, and they're like, man, I just don't see the data being strong this week. But and I am in the camp that I haven't seen really the shift yet of what I've considered. Okay, we're in full employment, so we're going to see this big shift in data, and we're going to really start to see jobs flatten out. We haven't seen it yet, and maybe it's coming. You know, maybe it's here, but I mean, I look like, but at the same time, the U.S. economy has been very resilient. It's been hard to bet against the U.S. economy and has bet against the jobs reports that have continuously come in, you know, relatively strong. So I'm not in the camp that the data is going to be horrible. So. But if the data is strong, I mean, you look at like the dollar yen. This is a really this is a good example. You know, and I was talking to another trader this morning, and she's short the dollar yen. I'm like, I'm not comfortable with being short the dollar yen because we took out this downtrend line here yesterday. And even though I think that stocks are overvalued and should come down, I don't necessarily think that the dollar yen, it looks bearish. I mean, you look at this you look at the reversal candle from yesterday, and then you know, also note that it, you know, we posted basically a double bottom here. You know,
yeah, very significant support. I showed it on Wrigley, Blake. So I mean, that I'm going to be interested in seeing. I wouldn't be short either, and seeing what kind of lift. We've had nice rallies off this level before. Just a guess, but I think it's possible we get your blue moving average up there.
Yeah, we could. Now that would probably have to be a really strong move in equities for us to get all the way up there. But if you look at yesterday's move, so here this is yesterday's last down leg, right? Yeah. And you look where we're at right now. And let me put this here. We're at the 100
people stuck, man.
We're at 161% extension. So this, if the dollar yen's going to stop here, it's going to stop here. But if it doesn't stop here, we're probably looking at a move back up towards 110.75 on this last leg. So, you know, like this, you know, we'll probably end up peaking somewhere over here. So obviously we have ADP coming out in just a little over than a minute, but you know, there's you know, here's the dollar Canadian. The dollar Canadian put in a double bottom yesterday. We have this descending wedge. I mean, that thing points to 126 and change right now. So there's a lot of potential here in the dollar if we have, you know, strong data. Again, I don't know if the data is going to be really strong. I think that the dollar has been beat up quite aggressively over the course of the last couple of months. It does have room to bounce. So even if the data is in line and it's not, you know, it's let's say it comes in at 170,000, I don't think that's going to be horrible for the dollar. It probably depends a little bit on revisions too. So heads up, guys, we've got data coming out in approximately 20 seconds.
Lesson learned, Blake. You have to buy the U.S. dollar yen after there's a ballistic missile that flies over the islands.
Yeah, I know, it's crazy, right? And it's like, yeah. I mean, I look around and go, wow, dollar, it's strong. 237,000. Yep, there goes the dollar. Boom. Yep. Well, a dollar yen didn't really go much higher. Maybe there's a little bit of a revision down there, but still, you know, it's a decent number. It's not a bad number, right? It's not a bad number. And we've got gold coming down. Gold might test 1,300 here. Now that is a breakout point, and I'll tell you, if gold breaks through 1,300, then the dollar is really going to have some tailwind, I would think. But yeah, I mean, look at the dollar yen. We're pressing 120 right now.
Bonds weakening as well as
bonds,
expected, of course.
And bonds are ugly, aren't they, Steve? I mean, look at the bond market. I mean, we had yesterday. We pointed out big resistance in the bond market. We've reversed.
Yeah, Blake, if you also draw it, there is also a channel there, which we falsely penetrated above, and as you see, we even incrementally, even posted a new high above the previous high we had a few months ago, just incrementally, and now it seems like a false break. Yeah, there it is.
Yeah, and actually, if you look at the actual CME contract, that's like a ETN for Orlando, but it's the intraday one's a little bit, it's off a little, but it gives you pretty much the same look. But this is the one you're talking about.
The revisions you asked for were also positive, by the way, Blake. 178K revised to 201K.
Wow. So, all in all, a really strong numbers for the U.S. And so, I mean, you got to be careful thinking about like what is going to happen with the dollar going into the next couple of days here. Oh, look at the dollar Canadian's taking off. Thank God I'm long.
One thing, if I may point out. Hi guys.
Hey, good morning, Stel.
You did mention.
Why are you hijacking this?
Hey, you did mention gold. Actually, if you remember the last year or two, every time we had a positive, I mean a really positive dollar number, US number, precious metals got smashed, and they're doing very little now. Like the gold is down $1.50. So just something to look at. It might go down now, but just something to look at. It's a different reaction than we've seen. We're used to seeing anyway. So
that's a very valid point, Stelios, and I'll tell you, one of the things about gold is, and Steve and I were toying with the idea yesterday: can gold and the dollar go up at the same time? First of all, these like the storm, unfortunate storm here in the U.S. is also very inflationary. You know what I mean? And the inflationary maybe headwinds that we've got coming might in essence keep gold bid. You got a little bit of risk aversion, if we do take military action in North Korea, which you think about what the intentions of North Korea are. It's like I raise all this ruckus to because I want to get less sanctions or easier sanctions on me. I want more oil. I want a voice in the political theater. Whatever North Korea's intentions are, I don't know if it's necessarily to destroy the U.S. or all freedom or.
I saw a tweet like it was a mistake. It shows Kim Jong-un and one of his generals talking to each other. And then the caption says from Kim, "I said lunch, not launch."
Yeah, that was funny. That was a good joke. That was a funny one. But the point to the statement is he is messing with somebody who will take action now. Like if with the last administration he can taunt and shoot missiles and President Obama wasn't going to do anything. Donald Trump might. So it's a scary game that he's playing. Also, I guess I also want to point out, and I heard the stat yesterday that Kim Jong-un, the young guy, he has launched more missiles thus far than his father and his grandfather put together at this point in time. How crazy is that? So you think
that's probably also because he's gaining access to more technology as the years go by, right? That's also one of the reasons.
Probably.
Yeah, you're right.
Still,
it's crazy.
Yeah, it's like he's becoming more and more rambunctious with his trigger finger, which again,
Yeah.
I don't know if it's going to serve him well. I think he's, again, we don't know what their intentions are. Like I said, I don't think they're necessarily to destroy the rest of the world, but it's to really, make a stance and show their force. But they could get serious backlash too as a response. And going back into why gold maybe will be a good pickup. I mean, I had a bid at 1302 this morning that's not getting hit on gold, so it's not dipping to that level at this point. But is it realistic to believe that gold and the dollar could possibly rally at the same time? I mean, it's possible. So anyway, yeah. So sorry, I had to take a sip of my coffee here.
So Blake, do you think that Donald Trump is our generation's Barry Goldwater? Our parents were worried about Barry Goldwater.
I guess you can look at that. I look at it that way. That would be but I was really young at that time, so I wasn't really.
Our parents were worried about it, but I had to duck and cover in elementary school. I'm thinking, how's my desk really gonna help? That's
right.
What I'm thinking.
Were you really thinking that when you were a little kid?
Yeah,
I mean, I remember.
Duck and cover, and I'd get under my desk and I go, it's an atom bomb. How's my desk gonna protect me?
Well, guys, as far as, so let's just talk about what the euro just did. So the euro just hit support. Okay, now this is, and let me grab a line here and you can see it. That support, 1910, right? If you use Forex Analytics, you can see the support level in 1910. I actually tweeted that out this morning. So that support, and we held. Now, do I think that the euro's gonna hold and continue to hold? Actually, I think it's gonna push a little bit lower. I've been wanting to buy the dollar ahead of this Friday. For that was like my plan this week, and I told you yesterday, I wrote down buy the dollar Canadian, dollar Mexican peso, and I also said buy the dollar Swiss at 94.50, and we were sitting here 24 hours ago at this moment in time at 94.50, and I did not pull the trigger. I didn't think equities are going to rally like they did yesterday, but the one trade that I didn't take is the one that worked out the best, and it always is going to happen that way, right? So I wrote down 3 possible trades this weekend on Saturday, and the one that I didn't take is obviously gone the most. The other ones are actually still working out fine. With the U.S. dollar Mexican peso still holding up, and the U.S. dollar Canadian is starting to make its move. But I wanted to pick up the dollar ahead of Friday, and the reason why is the dollar just is so oversold. The sentiment is so poor that if you have a marginally decent non-farm payroll on Friday, the dollar should have a positive response. So my 2 cents is I wanted to get positioned long the dollar ahead of Friday and hopefully be in a nice profitable position going into Friday, and then get an explosive move in the dollar after that. So now here we are in the euro dollar. Do I think the euro dollar is coming back down to this trend line? I really do. I do. I just don't know how it's going to get there. I think we're going to, eventually make it down here and then give us an opportunity to get long, going into next week at some point, down here sub 118. Again, I don't know if we're going to go down there today or start our trek down there today. Maybe we bounce a little bit, today like this before heading down. One of these 2 scenarios seems pretty likely to me. But regardless, I think the euro is going to correct towards a trend line and give us an opportunity to get long down there. I'm hoping it does, because ultimately that's where I want to be long the euros. I want to be long down at 118 and not long at 119. But also I think that the downside is fairly limited in the euro dollar at this point. Again, I'm not gonna. I don't want to steal too much of Steve's thunder here, but I will because I know he wants to talk about some crosses, right, Steve?
Oh yeah, for sure.
I bet you're cross central right now.
Yeah, we have a lot to talk about anyhow, so don't worry about it. Talk whatever you want about whatever you want, and we'll still have things to talk about.
Well, I actually wanted to talk about the Aussie New Zealand. This Aussie New Zealand last night, because of the comments from
Wheeler.
What's his nuts? Wheeler. Thank you very much, Wheeler. I said what's his nuts. Wheeler the dealer. He you know, is trying to talk down the Kiwi. These lines didn't come out very straight, did they? And the Aussie data came in better than expected. So the Aussie dollar actually Aussie New Zealand punched through 110. So let me just clarify here. I think the Aussie New Zealand is, and especially if we can hold above 110 today, it's in breakout territory. So let me show you why. So here's the daily chart in the Aussie New Zealand. We have a oh no, this isn't. There we go. This is the Aussie New Zealand cup and handle pattern. Cup and handle pattern is closing in on completion. But if you look at the, let me go over to this is the daily, but let's zoom out, right? So this is 2011, okay? Going back to 2011. What you'll notice here is this low. And let me take this this red trend line, and I'm going to move it for you so you can see it. Okay, this trend line here is the triangle top. This right here is the triangle bottom. So we are breaking out here. Now I'm already long the Aussie New Zealand, but a break above 110.25. So if we close this week above 110.25, I'm getting even more aggressively long, because then I'm now going to start targeting 114, which would be, you know, this channel high, if you will. But this is all very doable in the Aussie New Zealand. I've been waiting for this turn for a long time. This should also, and so I'll be initiating probably a pattern in play here in the next couple of days in the Aussie New Zealand if we can hold up. But the one thing I want to point out with this Aussie New Zealand is if the Aussie New Zealand is breaking out, that should automatically have you thinking bearish Kiwi on other crosses. Okay, so that's something that I want you guys to think about, because you know, I'm looking at, and I'll let Steve talk about the Euro New Zealand, which I am short as well personally. I'm second guessing my Euro New Zealand short, or thinking my profit target is going to be a lot less if the Kiwi is under pressure on this cross, because if the Aussie New Zealand is moving higher, it will weigh on the Kiwi moving forward. So it's just you know, food for thought on what's happening here. This is a major development. This is a multi-year development in process on the Aussie New Zealand, and you know, this triangle has been in existence since summer of 2015, okay, or spring of 2015, any which way you want to look at it. So the Aussie New Zealand looks really bearish, which means that the Kiwi dollar is going to have a hard time mustering any type of rally, which, you know, if you go over to the Kiwi, you know, New Zealand dollar too, I mean, we got this head and shoulder pattern, which is currently trying to develop as well, which looks very, you know, 68, 69 cents looks very doable in the New Zealand dollar, especially if the dollar starts to stage a real rally, which, I mean, look at the dollar right now. Dollar doesn't look weak at this moment, right? The dollar put in massive reversal candles yesterday across the board. All right, but I need to get ready for the U.S. Open, and I thought I'd pass it over to you, Steve. And I hear Stelios there, so I'm sure you guys are both wanting to talk about what's happening in the markets.
Okay, we can also talk about transfer market for football. I'm kidding. But we can talk. We can talk about that. Yeah.
Oh, come on, guys! Guys,
Sorry.
we just got the US GDP come out at 3% compared to 2.7. This is the second revision. So
Wow,
that was the first revision. So this is strong, yeah.
Oh, yeah.
Now look at the dollar. Shoo-wee.
It's
I like
flying.
it. I'll take it. All right, see you guys.
It's like a perfect storm for the dollar. Everything's coming together.
That's right.
Yeah, looks good. Okay, so yeah, obviously we have quite a lot of things to talk about. Obviously, you know, yesterday's shooting star candle in the Euro USD. That's why you always need to wait for the end of the day. Is now becoming an evening star formation with the combination of today's candle, which is currently underway, but it doesn't look very easy that it's going to reverse and close positive, especially, you know, after all this bout of data we had, that all of them are supportive of USD strength. Now, if we add to the mix, because obviously in this case we should do a top-down analysis, and in this case, since we're talking about the dollar, we should first have a look at the dollar chart. Why? Simply because the dollar gave us a false break below a 15-month low, which was here. It was on May 2016. So we got a false break below it. We almost tagged the 161.8% of this bear flag correction. And now we are back testing. We are about to back test the 93 support resistance zone, this time obviously as resistance. So needless to say that this might have been the last push for some time. And, you know, we're going to have confirmation. We were expecting a break lower in the bear flag. This has been drawn since then. We got that. We tagged, you know, the target we had in mind. And now a close above 93 is going to completely change the game for the dollar, simply because, you know, in combination with, as we've talked about, and Blake has talked about it as well, the extreme sentiment, the extreme positioning, etc., etc., etc. This, you know, this has the potential of creating like an explosion higher and a correction higher. So, you know, a close above 93 will open once again the door for a retest of 95. And, you know, if we look across the board, we can see several markets that are responding to it. For example, the pound got rejected from the 130 zone that we said yesterday, you know, is going to be key to letting us know what's going to happen from here. So we got a rejection from there. The Euro USD got a rejection before reaching the high point of the channel, but it did reach, I'm going to show you a 4-hour chart. There it is. It did reach almost perfectly. Okay, this is a 4-hour chart. The 161.8%, almost to the pip, of this bull flag correction. Okay, so actually we did tag this one to the pip, and we're now reversing. Of course, the fact doesn't change that the euro looks constructive for several reasons across the board, but the fact also remains that as we said yesterday, you know, the sentiment is extreme and the dollar is definitely beaten a lot, and you know, we might now have a period of euro USD weakness, which also is going to give us, you know, some good opportunities to join the general trend. You know, several levels we can have a look at. First of all is as you see, we were in an ascending channel. So first target we might be looking at is the confluence of this ascending channel and some support resistance we had there at around 117.30. So that's one first level I would have in mind. Also, if we extend this bull flag, you'll see that, you know, more or less it coincides to that point. So for example, something like this, that's going to be the most shallow target we can be looking at. Beyond and after that, we obviously have the 114.50 level, which is critical. I mean, in my opinion, this is the bull bear line, and that's what we've actually put as a bull bear line in the Forex Analytics as well. I mean, as long as we trade above 114.50, you know, the Euro USD has to be considered constructive. Okay. On the other hand, on the short term, because you know that's the medium term view, I'll reiterate once again, yesterday's candle was a nice reversal candle, but in combination with today's candle, this, you know, 3 candle formation here is an evening star formation. That's a very powerful reversal formation. So now we do have confirmation that finally some kind of a correction lower might be starting. As I had repeated when we were here, this would break to the upside more likely than not. I mean, the price action was clearly corrective, and we didn't get such a signal. Now we're seeing something more important. So as I said, first level to look at is 117.30. Below that, it's 114.50, and if we draw some fibs, which I'm going to do later, we might get some intermediate targets as well. But let's first, you know, see if we're going to reach 117.30, and we can take it from there. So you know that's the case with Euro USD, and as Blake showed, USD Swiss. I also have one more formation I'm monitoring here, because USD Swiss is very interesting for the following point as well. First of all, we had this descending channel here, which on a closing basis, and despite falsely breaking below the low, we did hold. So this descending channel resistance held nicely as support, especially if we're talking about a daily closing basis. Okay, and when we were up here, this is what we were looking for, you know, a move lower, a move higher, and another move lower. This is exactly what we got, of course, not in the timing that I drew it here, you know, because we just depict like, you know, some basic idea of what to expect. So actually we did this, now we did this move lower, and you know, yesterday's candle was extremely bullish, because when you get such a long lower wick and you end up having a hammer while being, you know, very negative on the day, and you're then seeing the next day continuation as we're seeing today, you know, that obviously opens the door for at least a move higher to retest once again 1970.50, which, as you've seen, has held plenty of times as resistance. The question is, will it do that again? No idea. But are we going there to 97.60? Very, very likely. If the US data keep being supportive for the next few days, and you know, last month's ADP, if they're leading into what we should expect for NFPs as well, if we get a strong NFP print, which looks likely, that might be the catalyst, along with, as we said, you know, wrong positioning and extreme sentiment for a whipsaw move from the dollar across the board. Also, just a while ago, I booked my USD NOK short. That was a nice trade, but you know, seeing this kind of a formation now, and you can see the same picture at USD CAD, and also this also brings in mind the divergence, because USD CAD did not register a new low while the USD NOK did. Okay, so I think, you know, you should be careful here, because we might not get a new low now, and we might get like this kind of a move, the blue move instead of the red move. Okay, so across the board we are seeing, you know, plenty of potential for USD reversals. Obviously we've already had like plenty of false starts, but you know, at some point it has to correct, and you know, the more time that passes that it doesn't, the higher the likelihood that, you know, the next time is actually going to indeed provide you like some kind of a true reaction. So I think that you know, if you're short the dollar, this is the place that you should, you know, definitely book profits. And I'm not telling you to go long, but definitely you should at least be you know, looking for some opportunities, or at least wait it out a little bit to then see what you're going to do if you want to be short at a better level at least. Now, I promised yesterday to talk about the euro pound once again today, and I'm actually shorting the euro pound at market once the webinar is over. So, you know, I had yesterday's candle. I see a movement lower today so far. So more likely than not, within the next couple of hours, I'm going to be short this pair. As I'm also now short this pair, I also issued a pattern in play on that. This is the Euro Kiwi. The reason I'm short the Euro Kiwi is because I have triple confluence here, which is what? It is the candlestick, yesterday's candlestick, which is very powerful. It's a shooting star with a very long upper wick. It's the rejection from the ascending channel. It's the 127.2 of extension of this move lower. And I can see a 5-wave move up, and the 5th wave was almost perfect to, you know, a wave 5 equaling wave 1. I mean, that it would have been completely perfect at 166.60. Okay, but you know, those are just indicative targets. So due to this triple confluence, and today, as it seems, it's very likely that we're also going to have an evening star formation on that as well. I'm shorting it for a corrective move lower. So I'm repeating, I'm not bearish the Euro Kiwi on the long term, on the long run, but I like this confluence, and I would at least want to see a move lower to test this breakout point at 162.36. Okay, so I got rid of my USD NOK trade, booked profits there, but now I'm involved with the Euro Kiwi, and within a few hours I will be involved with the Euro Pound as well. Stelios after Euro, check the Euro Aussie chart as well. Yeah, sure, of course. Obviously, from a relative strength, somebody would have preferred perhaps to be short the Euro Aussie. Blake made a very good case about the Aussie Kiwi. If you remember, we had seen it together as well, but I have to add the following thing here. First of all, regardless of the relative strength, I don't like the fact that we got rejected exactly from the confluence we had pinpointed. Blake showed the same thing. Obviously, I've drawn this descending triangle resistance just a little bit differently, because for me, it confluenced since yesterday. I think we talked about it either yesterday or the day before, with this high at 110.18. So as long as this 110.18 is holding, which if we break out, this is going to be a major break. I talked about it the other day, and I said that for me, a daily close above this definitely targets 113 to follow. So that hasn't changed. I think that's where we're going once and if we clear that resistance. But we haven't done so yet. So, you know, if we indeed get a rejection from current levels, and at least even, you know, a correction lower, so something like a retest of this channel, that, you know, temporarily should even give some more strength to the Kiwi in comparison to the Aussie, even if it's temporary. Okay, plus the fact that although I have a triple confluence and a very nice setup at the Euro Kiwi, I'm now explaining why I preferred to short that one. I don't have such a strong confluence here. Okay, I mean, we did have a zone here, we falsely broke above it, we also have a shooting star, but, you know, I had a triple confluence there, I don't have it here. Okay, so to be honest, I'm happy with my choice of, you know, shorting the Euro Kiwi instead of the Euro Aussie. Now, of course, that doesn't mean it's going to play out, but, you know, that's how I saw it, that's what makes me feel more comfortable, that's what I did. Chris, I'm probably not going to be issuing a pattern in play in the Euro Pound simply because Forex Analytics already has a short pattern in play in the Euro Pound from the macro. So, you know, it's not very, you know, it's a little bit counterintuitive. I mean, it doesn't make much sense having, you know, two patterns in play on the same currency pair showing the same direction. That's the only reason I'm not going to do it. But, you know, that's why I'm also calling here, you know, that I'm going to enter in advance. Yes, about your question where my stop loss is going to be, my stop loss is going to be above the high, yes. Because, you know, this assumption, so my stop loss is going to be, I'm guessing, somewhere like 93.20, somewhere there. Probably 93.20, I'm going to put it. And also my first target here is going to be this channel support. So, you know, my first target is going to be like at around, you know, depends on where we find, when we find it, because, you know, it's ascending, obviously. It can be like 90.50, it can be 91, depends on how slowly we move there and how the price action evolves. But regardless, you know, I'm going to be risking like roughly 80 pips to make like I guess at least 150. So, you know, it's a nice reward to risk ratio. Thank you, Chris. I think you're exaggerating. So let's see, because we jumped quite a lot of questions. Let's go over them one by one. Luca is talking about the bonds, and he's right about them. I mentioned them before, given the occasion. He says that, you know, rejections from the 165.50 here and equivalent rejection from here in the treasuries might actually point to like double tops, more or less. And I tend to agree with you, but I definitely need more evidence, Luca. I know you're thinking of the same thing, but I need more evidence. So we even have some slight RSI divergence. I'm taking that into account as well. But you know, I need to see more evidence. And the first piece of evidence I would want to see for the Bund, for example, is a break below 164.50. For me, a break below 164.50 is going to more or less testify that, you know, this is a viewpoint that you talked about. And having to do with the treasuries, the equivalent point that's going to get me believing in that is a break below this channel. Okay, so roughly it's now at 126.65, let's call it. Okay, so if I see these levels, you know, break, then yeah, I'm going to be on the same camp as well. And until then, you know, I remain cautious. Okay. Goldman Sachs thinks that after 2016 rally, we had an ABC down, then ABC up, now an A to the down, and we need two more legs, BC, to fully complete the correction, says Robert. But Robert, obviously you wrote that when, from the timestamp I'm seeing here, when Dale was probably speaking, or at the beginning of Blake's speech. So if you want to tell me which ticker you're talking about, so we can have a look at it together. Okay, there is a small flag playing out on the 1 hour DXY pointing to 93.06. Yeah, the general vicinity of that NITIS is going to be, you know, key. I mean, we're going to make it there. We've already made it there, most probably, from the last time I checked it. The question is, what happens? Are we going to get a close above 93? You know, that's going to be key, as I said. US GDP, huge number. Yes, Jess, completely agree. Please buy Sanchez and Ozil from Arsenal, Steve. For which teammate? I really think that Barcelona should actually get Sanchez back, in my opinion, instead of bidding Coutinho for 160 million. That's nuts, having to do with that. But Ozil, personally, I never believed so much in Ozil. He has the skills, but he doesn't have the mentality and the determination, you know, of a top-class player. You see, we ended up speaking about football as well. Thoughts on Ozil again? Silver weakening article on the site would go line in line with the decline in this pair. Okay, let's have a look at Ozil again. Okay, this is exactly what we had in Ozil, and so far it has played out very nicely. I mean, we were expecting another leg higher. We did get this. So now we are at a make it or break it point, which will prove if this was a simple ABC correction, and we're going to resume lower, or the correction was this, and this is like a 1, 2, 3, etc. So probably today or tomorrow maximum should shape this and give us more, some better information of if the correction is already complete and we should be looking to the upside, to new highs, or if this is just a correction of the correction and we have another leg lower. So I think we need to be a little bit more patient, Robert. Within 1 or 2 days maximum, we're going to have that answer. Silver better candidate than gold for false breakout and reversal, lower in dollar, and as always, our friend Luca is giving us a chart. Let's have a look at it. Stelio?
Yes, I am here. Yes, sorry.
Don't you have that nice silver gold ratio chart? Because I think we should show this to people here and Luca.
Where did we have that? I remember looking at it, but it wasn't mine. Who had it?
Okay, I thought you had talked about.
Wait, no, I'll try to find it. Hold on, you carry on. I'll try to find it.
Yeah. So yeah, I see what you're seeing here, Luca. I mean, this is a nice trend line resistance. Let's have a look at my chart. Let's have a look at my chart on a weekly actually, since we want to have a better look at it. Okay, so this is this is obviously the trend line you're looking at. We haven't drawn it, but I see what you're seeing here. But on the other hand, I'm inclined to believe that this is a larger bottoming pattern. Just look at it. Okay. I mean, obviously 114 is a major base for the metal. And, then we created another one at around 1580. So yeah, I agree with you. We can get rejected and get back there again. But to be honest, medium to long term, I'm constructive silver. Honestly, I am. Now, if we go back to a daily chart here. Oop. Let's see it. As far as I'm concerned, we finally broke the 1715, 1720, call it resistance. As long as this holds as support, I have no reason to be bearish silver anyhow. Because, since that stupid flash crash low, the price action has been constructive. I mean, we're moving lower, we're correcting, we're moving higher, sorry, we're correcting, we're moving higher, we're consolidating, we're moving higher. But this might prove to be just another consolidation. You know what I mean? So I think it's too early to discuss about it because, there is still absolutely no technical damage. Same with gold. Yesterday's candle was, major. There is no denying that. And, the gold setup looks a little bit like the Euro Kiwi short I took because, it also has a confluence. I mean, this was the 127.2 of this move lower. We also had an ascending channel, which we intraday penetrated to the top side. We also got a shooting star. So I have to tell you that when I looked at the gold chart, it really, felt the same as the Euro Kiwi chart. But on the other hand, I can't dismiss this break above the 1300 mark. And given dollar's strength today, Stelios mentioned it first, just a few minutes ago, it's holding up quite nicely, right? So, I'd rather wait a little bit more on the metals. But, I see what you're seeing, so I understand your point about silver perhaps underperforming gold in comparison. And, also, let's not forget that gold broke out of a major, level, while silver is still below, equivalent levels. Stelios,
by the way, I found it. I put it on your Skype just because you have the screen already. If you want to show the chart.
Yeah, sure. This one, right, Stelio?
Yes.
This is the gold-silver ratio. Yeah. Yeah. So it shows. Yeah, so it shows that, yeah, of course, we don't know if we're going to get a rejection here. To me, to be honest, to me, I mean, this was, this was clearly a nice, uptrend, and then we got a rejection, but, we don't know what kind of price action this is. But anyhow, it's interesting to see. You can see in this ratio, they've marked when gold tops and when where gold bottoms, and actually this gold to gold silver ratio is, nice to be giving you signals, for gold. Let's see. Looking a bit Goldilocks for dollar now. Harvey will get a debt ceiling deal done. Yeah, I agree with you with that on you, Luca. Provide fiscal stimulus. Yeah, I think they've already calculating that the costs, the repair costs will exceed 43 billion, if I remember right. And data coming out strong with Fed reduction around the corner. Yeah, with Fed balance sheet reduction around the corner. Yes. Europound also went right to the monthly R3 pivot and pivoted. Okay, nice to know that, Rob. I'm not following pivots closely. I know exactly how they work, but I'm not taking them into account. But yeah, so that's an extra confluence as well. Still negative Aussie yen. Glenn, it's exactly what I said. I'm still negative Aussie yen if we top here, because as far as I'm concerned, I still see just an ABC correction and almost a perfect one. So, I'm still negative on Aussie yen, but if we keep moving higher for 1 or 2 more days, then I'm going to be looking for new highs. So, I'm still negative as long as we turn down very, very soon from current levels. Okay. Jess said, oh, thank you for reminding me, Jess. Thank you for reminding me, because I also wanted to say that I'm going to be shorting this as well. Yeah, palladium. This was a nice signal. The last rebound was very weak. I'm gonna be shorting palladium. If we close lower than yesterday's low, I'm gonna be shorting it today with a stop above the highs. So I'm gonna wait for end day. And I'm going to do that as well, actually. Thank you for reminding me. Greetings and thanks. Requesting chart of SPX. Thanks. Sure. Arif is talking about Arsenal. Yeah. Good football analysis. Thank you. Nice rejection for platinum on daily. Okay. On serious note, 8-year bull run, S&P Dow has to correct sometime September, October this year. I agree with you, Arif. I've said since months ago that I expect a major turn lower within the year. And, obviously, fall, end of summer, fall is a good season. Okay, more requests for S&P. Okay, let's look at stocks then. What kind of price action will get you bearish on gold? Definitely, I need a daily close below 1300 again. So I cannot turn bearish on gold unless I see at least a close below there. So that's the answer on that. And let's have a look at the S&P. Okay, nothing has changed in my view with the S&P. I mean, yesterday's candle is very bullish. There is no question about that, but nothing has changed. In what sense? I even wrote to the analysis that for me, a daily close above 2,455 is going to most likely signal that there is a new leg starting that is going to take us to new highs. We haven't seen that yet. We've barely held this level, but as long as we are holding on a closing basis that, this is also an equally a possibility that has equal chances. I mean, dipping to 2,400 and, that's a critical level. So we are still holding this corrective channel barely, but we are holding it. And as long as we do, why not a move to 2,400? But if we close above 2,455, I think we're going to be seeing new highs. So we're going to have one more push to new highs. In my opinion, very likely to be a terminal one. Okay, I'm going to be looking to aggressively short new highs. Not the first day we see them, but you know what I mean. I mean, I'm going to be looking then for some extension, for some FIB extension targets in accordance to the correction lower that we will have had, because under this scenario, under this scenario, let's assume that that's the scenario, then the correction will have been this one here. So under this scenario, for example, I'm going to be looking at targets like 127.2 at 2,510, 161.8 at 2,536, almost, to go short. Okay. Until then, I understand why somebody would want to remain bearish. I totally do. I totally do. More or less the same applies with Nasdaq, as you see. Okay, so not much of a different view in Nasdaq.
Okay, Steve, how are you?
Hey, Dale.
You probably thought I left, went on vacation.
To be honest, yeah.
I was able to go. Thank you. I was able to make a real nice big breakfast. So thank you.
Okay. We had a lot to talk about, so
Yeah, nice segue with all the coverage on metals because Bill Downey's with us at goldtraders.net. So Bill's in the house.
That's going to be very interesting then. Okay, I'm looking forward to hearing his views.
Yeah, he's an excellent technician. So Bill, I want to welcome you to our community, and I'm now making you the presenter. So looking forward to hearing your voice and seeing your charts. I had a look at some of the things you sent on Twitter yesterday. I can't wait to talk to you. You sound a bit different than most gold people.
Well, thank you, Dale.
Hey, Bill, so nice to meet you.
Nice to meet you, Dale.
All right, great to have you here today. And you know what great timing. We had that breakout over 1,300 in gold, and I've looked at some of your work, and you talk both sides of the market, Bill. That sets you apart from most people in the gold business. Their philosophy is don't wait to buy gold and wait. Ever hear that one?
I've heard that one before, certainly.
Yes. Yeah, and and you have lines in the sand where bullish scenarios do not come in, can be negated. So I read a little bit about your bio. Perhaps you could give a little description of how you came to believe in hard money, and what your prior life was and who your influences were. I know when I was new in the business, guys like Doug Casey, crisis investing, I cut my teeth on things like that because in the late 70s, we had another bull market in gold, peaking on the invasion of Afghanistan by the Russians. And I even noticed on one of your charts, you go so far back that you show that 880 peak in 1980. So I'm going to be interested in whatever you want to share here.
All right, well, let me give you a little bit of background about myself. While I try to, for some reason, I've lost the screen once you made me a speaker, and I'm trying to get
maybe
back.
You're showing, I'm seeing your gold weekly report. So you're able, if you use multiple screens, perhaps you're showing the wrong screen.
Okay, and again, I'm not sure. Just let me give you a little bit of background while I try to find the site that I'm at here.
Okay.
Basically, my introduction to metals was after the 1980 run-up, and
Right.
this gentleman got me interested in silver, who was buying physical silver. And I made a few trades, and of course I lost some money. And there's a guy named George Angle who had written books.
Familiar with him. He was an options guy, wasn't he?
Yeah, he was an options guy. And he spoke about technical analysis, and I started looking at charts. And from there, it led me to Larry Williams, who had published a book called How I made $1 million trading commodities. And from there, I started looking at chart patterns and studying charts and cycles. And then I ran into an ad by Martin Armstrong in the Wall Street Journal in the 80s. And I started receiving monthly publications from him. And that's really where I got totally interested in charts and cycles. And from there, I just basically, over the years, have, you know, from looking at so many charts and reading so many books and seeing what others had, I
good choice. You made some good choices on, you know, who influenced you. Martin Armstrong is one of the, in my, you know, extremely accurate and humble opinion, one of the greater minds of markets. And
he really is. He really is. And his discoveries and his database background just really made an incredible influence on me. And I learned quickly.
I tell you what, Bill, I see you struggling a little bit. What I'm going to do is I'm going to take you off being the presenter, and then for some reason, and make me the presenter, and then make you the presenter again, and you'll just see a share screen thing pop up. But first, let me take it away from you first, and then. And anyway, I wanted to show everyone your website, although you might do it later. Here's Bill. And your background was in manufacturing, disk drive, and the late 80s had you thinking about Armageddon. So now I'm going to make you the presenter again, Bill, and the screen share option should pop up, and then you choose which screen you want to show. See if it works for you this time. It'll say share screen. Okay, so we can, okay, there you go. There are your goals. There's your charts.
Okay, now I'm starting to get the gist of it. Well, the one thing I wanted to do first off is to say that the only concern I have about the current rally is that gold is still acting in a way that it has been during this bear market. As you can see by this chart, gold has been making August and or September highs almost every single year except 2015, where we made the high very early in January. And
interesting.
The only concern that I have about this market is that the seasonal patterns in gold usually it's not a situation where we see new yearly highs in August or July or September when we're in a bull market. What we usually see is lows. Now, I was really excited in July when we tested the moving averages, as you can probably see on this chart here. And in July, we went down to 1205, right where the long-term moving averages are. Yes. And the moving average I'm using is a 34-month on the blue, and the red is a moving average of the moving average, okay? And I've never seen anyone else using that, but as you can see.
You mean they're both 34?
No, the red is a 13-month moving average, or 13-point moving average of the 34-month. I've never seen anyone else using this. But as you can see, when the blue moving average is above the red, we're in bull mode. And when the red is above the blue, we're in bear mode. And right now, they're converging right at the 1210 area. They're within $1 of each other, so I'm anxious to see what the new number is going to be after the close of August here tomorrow. Basically, if we can get the blue line over the red by a buck or two, and with the price above it, it should be giving us a buy signal. But again, my only concern about this market is that I don't like August highs, and that is what we were doing right now. The one thing that is different is there's this downtrend line that you can see that we're actually moving above it. I'm going to show you another chart here. In July, and we tested the moving averages. In July, they were at 1209 and 1214. You can
Yes.
see we pulled into this wedge here, and I was really, really bullish when I saw us test 1205, reverse, and then close on the highs in July.
Right.
And you can see this wedge that price has got.
So you would, after that July low, you would have preferred a pullback in August instead of breakout in August. Am I reading?
I would have preferred not making a new yearly high.
Okay, got it.
So that is just my one concern. With that said, we are breaking above the downtrend line that has been in effect, and it's really the only downtrend line in all of gold, taken off the 2011 and 2012 peaks. And as you can see, the last 16 months, I've been on Twitter showing this line over and over again as the line that we need to take out. And so, with that said, we are breaking above that line. What I'd like to see to really confirm is we're testing the 1322 area, and that area was, you may recall the crash in April of 2013 when we dropped 150 bucks. That low that day was at 1322, okay? And so what we've done here is we've retraced back to that April crash, and now it really comes down to whether we're going to be able to break above 1322 as well as the Trump election night high of 1338. That to me is significant resistance, and closing above that, there is one other number, and it's Martin Armstrong's number. He says a monthly close above 1362 would, for the most part, give us a strong odds that the low is in place for gold from December of 2015. And what I'm going to do right now is I'm going to show you.
That's an interesting point you bring up, Bill, about, trying to take out the election high, because certainly many things have retraced or taken out the highs, the dollar, euro, and a lot of sectors have given up the Trump rally. So it's almost like gold has been lagging the weak dollar move.
It really has. And one of my friends, Greg, who's a fundamental guy, him and I exchange a lot of ideas. I'm the techie and he's the fundamental guy, and he's been pointing that out, that with the dollar down significantly at 10%, we should see gold at higher prices here.
Right.
And so,
how about the shares, Bill? To me, maybe up until this week, they've been lagging fairly dramatically, the mining shares. And
they really have been lagging.
No?
I do have a chart I could pull up on that. Let me see if I can just find it. If the bull market in gold stocks has resumed, then we're most likely just at the beginning.
Okay.
I think what we're seeing is that, keep in mind that mining companies are managed by people who have to make profits. And they made a lot of mistakes during the bull run from 2001 to 2008 when they bought a lot of
hedges,
small companies, and
debt. They took on a lot of debt.
Yeah, kind of a lot of debt, and some people got really seriously burned in gold stocks. And once you've been burned twice, if you've been burned in gold stocks, they become something that you're very leery of. Gold stocks, you're either going to make a killing or you're going to get killed. It's a very, very difficult market. And as you can see, even the rallies themselves are very erratic. We had that big crash over here in 2008, and then a final rally up into 2011. However, if gold does close above on a monthly basis 1362, I think you're going to see the gold stocks react, and I think you're going to see people coming in who are buying stocks now because I think what you're going to see is I think you're going to actually see the Dow reverse in the not too distant future. We have the seventh year of a decennial market is almost always down. There's almost always a big correction. And, you know, as far as I can see, if we look at the Dow, although the chart says target 22,890 to 23,030, this is a Twitter post I did on August 1st. The odds favorite price point for a peak on the Dow is at 21,890 to 22,030. Interestingly, the July close was at 21,891. We did exceed 22,030 in August on an intra-month basis, but I can see that we're below that. But the key is this major resistance line since 2009 has held all the rallies and has formed all of the corrections in the market. So I think what you're going to see is the Dow, the odds are very high that we're going to get a sell-off beginning soon. I think as early as after September and October look very risky to me in many cycles that I look at, as well as other people. And I think what we're going to see is we're going to see a big pullback off of this major resistance line that we have, possibly down to the 20,000 area, but it could be deeper. Once stocks begin to sell off, I think that's when you're going to see people jumping into the gold stocks. They're going to be looking for different areas to invest. And I think that is the sector that's going to come forth if gold can give us the follow through that we're looking for here, which is that monthly close above the Trump night 1338 and then Martin Armstrong's 1362 level.
All right, so I noticed, Bill, that monthly closes are very important to you. So I believe in them too. I look at weekly closes for direction, like 2-week reversals and so forth. So, but I have seen time periods, just like you did before the new high in the gold shares, where when the Dow sells off, that gold stocks and gold can remain under pressure. And let's face it, they've both been rallying together. So, you know, everyone's looking and does look for it to be, you know, a negative correlated asset, but it isn't always that way, is it?
No, it's not. And the 2008 crash basically was a liquidity crisis.
Right.
And when you have a liquidity crisis and you're getting margin calls, everything, well,
yeah, you have to sell the kitchen sink. You have to sell the kitchen sink to raise cash.
Exactly. The baby goes out with the bathwater. And I think that that crisis, certainly gold crashed down to 680 and it took the gold stocks down with it. Everything went until they, until the Fed stepped in and just printed their way out of that situation.
This time, though, you think is different, that the fear in the market, the VIX being at historical lows, or they were there, that people, the flight is going to be out of the dollar, just like the trend that's already in force, and into gold.
Exactly. And I want to show you a chart here that this was from March 28th.
Yeah, I've seen that. Yeah, that it's interesting.
On the political cycle behind the U.S. dollar. And as you can see, when the Republicans are in office, and they're supposedly the conservatives, the dollar does not do well.
They conservatively trash the dollar.
Well, they cut taxes and raise spending anyway. And if you really want to look at the deficits that the United States has, the Republicans hold the majority of it. Again, because they cut taxes and raise spending. At least the Democrats, and I'm certainly a conservative person, more than a liberal person as I get older, but the Democrats at least raise taxes, and for some reason, and I don't understand all cycles fundamentally. My friend Greg could certainly talk to that. But the data shows that when the Republicans are in office, the dollar does not do well at all. And as early as the 5th of January, we were calling for a dollar top at the 105, 102 to 105 level. That rally that we saw from 2016 on this chart, actually the rally started in 2014,
Right.
at 80 level. There was a liquidity squeeze that took place, and I think above 103, 105, a liquidity panic would develop globally, because 65% of all debt is denominated in U.S. dollars.
Good
And
point.
as that dollar was rising, the tremendous move that it had was really people coming into the market to protect debt positions that they had, because the higher that dollar goes, the higher it was to sustain those debt payments.
Okay, so you have some interesting support levels here around 88 and a half or so. You think that's going to, so I know there are still some dollar bulls out there that are looking for that type of liquidity crisis you just described, the strong dollar being the catalyst for it. So something's going to have to come out of Europe for people not to want to be in the euro anymore. I'm not sure what that could be, but 88 and a half might be a good buy zone if a contrarian type dollar buy down there.
It's certainly an area to be looking at. The move down has been strong. We think that they're trying to re-liquefy the globe right now.
Right.
And really, that is their only shot out of this, is if they could somehow re-liquefy and
debase the dollar to make it easier to service debt.
Not only that, but to when there's liquidity, what they really need is somebody to be stepping up and investing and getting people to buy more things. We need non-discretionary spending to rise in the in the global nations. I mean, housing, food, clothing, and shelter is the basic staple, and that is not what is really needed to invigorate the economy. What you need is non-discretionary spending, extra money to spend in order to be able to stimulate real global growth. And that's another thing. We talk about global growth, the good old inflation, deflation debate.
Yeah.
This is the commodity index to CRB. Commodities is what everybody uses. And
right.
The deflationists, their line is, if you really look at this, we are sitting at 40-year lows in commodities. And I think the inflation-deflation debate is one where there's a mistake when we say inflation versus cost of living. There is no doubt the cost of living just keeps going higher and higher and higher. But I think that is a factor that is being caused by the tremendous amount of taxation that is being introduced and the regulations that government imposes upon business, which makes their cost of production much, much higher. I live in Canada now. I've been in the United States for 40 years. The regulation here is just, it's anti-business. It's just incredible what it does to stymie us. But the bottom line is,
where in Canada? In Canada, there's more red tape than the U.S.
And probably more red tape than Europe. It's just incredible.
I thought California would lead the way, because I say California is a state where you need a license to get a license.
Well, you know what? You're certainly right about California. It is the poster boy regulation. That there is no doubt about it. But my point is this: if gold is going to rally, it has never rallied without commodities following it. And if there's a debt crisis, well, first off, if there's a resurgence in global activity in GDP, we're going to get a commodity rally and we're going to get a gold rally, because gold rallies when commodities rallies and when interest rates go higher and when things are accelerating in that manner. I know that the street always says, oh, the worse that the economy gets, the worse it's going to be for gold. No, it's the other way around. Inflation or global expansion, gold leads. If you do any historical research, you'll see that higher interest rates mean higher gold, whether it's in a panic mode like it was in 1976. And if it is, and that is what I think is coming, more so than a global expansion, I think that we're going to roll over here, and I think it's going to come from Europe. Italy is already talking about bringing currencies back. We know the Greece situation. I think there's going to be a debt liquidity crisis, and this time, I think that it's going to go into gold and commodities. Commodities are going to rally in a panic. That's what everybody's going to run for. But if you see this one,
so not a no one wants paper. They all want stuff.
And that's exactly it, Dale. The shift from from soft paper assets to hard assets is coming. And I don't think it's that far away. I think we see it beginning. The Canadian dollar, which is a commodity dollar, peaked about a year ago. It re-rallied. It had a secondary bottom at around 137, right when the dollar peaked in January, and it has been rallying pretty hard.
Right.
And so moving higher. So I think that that's actually leading gold. I think that the situation in gold is it's the report card of the world, and through swaps and through using paper gold and being able to short on leverage like the central banks are able to do on the COMEX, I have to believe, my friend Greg has convinced me that there is, I'll say manipulation, but
the paper market. So that, that's why Sinclair started that exchange in Shanghai for the emancipation of gold. Is that what you're
and I think that I think that everybody didn't understand the level of how deep these guys can go. And but I think that the shift is coming. And the one thing, though, that we are going to have to see, we can see the political cycles right now with Merkel in Europe, with Trump in the United States. We can see all the civil unrest that is emerging globally. Okay, all of these cycles suggest that a trade war is going to start taking place, and that eventually it's going to lead to some type of global war, whether it's drones and robots fighting it or what. I don't see it. I don't see the Earth getting wiped out, but I do think that some very, very hard times are coming, and I think we're going to see a liquidity crisis. I think we're going to see a rush to commodities during this crisis. What we're going to see is companies going out of business, deleveraging. I think there's going to be a need for liquidity that's not going to be able to be provided. And when the masses capitulate, the tipping point comes when they lose confidence in the entire system, then gold is going to have its run.
When they don't get their Social Security checks. I'd like to wrap it with this, Bill. I know you're talking about gold, but we brought up the gold-silver ratio.
Yes.
Here today. Okay, go ahead. You could finish this. So you're looking for like 2032. Gold will be priced in yuan to about 25 grand. Okay.
Yeah, this is the long-term chart. You can see in 1869, the price of gold actually went to $162 an ounce.
Yeah.
And that was when
after the Civil War, the deepest depression we ever had.
Exactly. And I think that there's a repeat coming of that. The reserve currency has its time. It's usually 70 years. And I think the only thing that is really stopping the yuan from taking over is China is going to have to establish a global bond market. Once it does that, and their credit becomes good worldwide, then I think what we're going to see is a shift. The commodities are not going to be based in the United States. They're going to be based in China. And
are you in the camp that they're going to back the yuan with gold, and that's been part of the reason they've been doing the hoarding that they've been doing over the last 10 years?
I'm not in that camp. I'm not in that camp at the moment. I believe that they are hoarding. They are followers of Martin Armstrong. That was the first place he went when he got out of jail, was to Beijing. I believe that this crisis, liquidity crisis that's coming, is going to be happening with the US dollar as the reserve currency, and that China is going to step in once everything crashes and establish a new central market. I think the 21st century is going to belong to China in the same way that we took the place of England in the 20th century.
Yeah, and that was not an orderly transition. It was followed by World War.
Exactly.
And a depression, right? And that was Anglo to Anglo. That wasn't a shift from an Anglo-based system to something out of Asia. So could be pretty rocky. Do you have a view on silver gold? Will that gold silver ratio begin to work for people that are long silver, looking for silver to outperform gold? They've been looking for that forever.
It will, but it's going to happen in the second
final
half.
Final stages, huh?
Well, the final stages will be where it really blows off, definitely. But I think we will see that ratio begin to stabilize, and we will start to see it looking better. But it's going to be gold first, silver's going to follow, and then when the speculation grows and grows and grows, then the move is going to be over into silver.
Okay. So, Bill, your business model, do people purchase physical gold through you, or it's more of a timing service for trading the metals? Maybe you could show your website, and so that people that have an interest in what you talked about today can follow you. Your Twitter handle is at goldtraders.net. Is that correct?
It's at goldtrends.net.
Goldtrends. Yeah, goldtrends.net. And so can people buy physical through you, or what?
No, I try to stay out of that. And I just what we do.
So you're like an advisory service with a specialty in precious metals.
That's correct. I did give a long-term buy signal in December of 2015, and I did suggest for people to be buying gold at the 1150 area in 2016, at the end of 2016, as well as platinum at 950. What we do offer is signals, trading signals for short-term trades.
Oh, cool.
Where we send out, two or three times a week what's going on. We're about $90 ahead per ounce in gold, and we're $3.56 above in our silver trades this year. So we have this short-term trading signals that we do use, as well as a weekly commentary that we have where we discuss the bigger picture in gold. And we do follow cycles, short-term cycles. I'll show you one quick one before, if I can.
Sure.
Hold on just 1 second.
So with your belief on what's going to happen and some harsh times, have there's one thing to have financial survival, and you're talking about the fabric being ripped apart and social unrest, do you live in a rural area or an urban area?
Well, I lived 40 miles from Boston for 45 years. Right now, I'm living in a town that has a population of 400. The nearest city is 50 miles.
Okay, so that's right. You went to Canada. Was your move to Canada because of what you see coming?
Yes, it was that. There was also an opportunity here for me to take over a cooperative of fishermen, people that I grew up with as a child, who were in trouble, and they offered me a chance to run it and take it over and try to get them out of bankruptcy, which is what I've done over the last 4 years, and we successfully sold the company and got them all their shares back this year. And so that was part of it too. But yeah, I mean, you know, I grew up here as a child, and we always used to come back for vacation, and I always used to say, someday I'm coming back here. Okay. And with what was going on in globally, as well as, you know, in my personal life, it was just the right move for me to make.
Okay, Bill, well, you know, I gave you some visibility, so I want you to save me a spot in your barn for when when everything hits the fan. All right, buddy. And what a great presentation and excellent insights into the metals, both technically and fundamental views. And I'm so glad I reached out to you, Bill, and that I'm so glad that you accepted my invitation to address FACE today. And why don't we keep in touch as time moves on and the cycle begins to manifest, and get some updates for you down the road later in the year.
I'd love to do that, Dale, and I want to thank you for the opportunity of being able to speak to folks. And I just thank you for doing this, and I'll make sure that I spread the word of your seminars that you have, because I was listening to the guy before me, and I really enjoyed his. So I think I'm going to be doing a lot more listening myself as well.
You're always welcome here, Bill, because you are now my trading warrior brother. So thank you so much. Thank you so much for coming today, Bill, and edifying FACE. Everyone have a great day. Enjoy your summer, and we'll see you tomorrow. I know it feels like Thursday to me too, but tomorrow is Thursday. And we have a stock trader who also has a big reputation, Joseph Parnes, will be with us tomorrow. So most of all, everyone, don't just count your pips, count your blessings. Nice analysis trading by Blake Morrow and Steve Olgi and Stelios. Thank you, guys.
Thank you.
Enjoy your day. Thank you, Bill. See everyone tomorrow. Bill, I'll tweet this interview later and I'll drop it in your box. Okay, buddy?
Thanks so much, Dale. Hoping to hear from you again.
All right. Adios.
Adios, amigo.